A very good afternoon, guys. In the earlier 3 to 4 classes, we completed the first part of this chapter, that was discounting of bill and the concept of rebate. Today, I am taking the next part, that is non-performing asset. A very simple part, you can say one of the most easiest part of this chapter. In this class and the next class, I'll be focusing on NPAs. Now, first, before I go ahead, you should know what is the meaning of NPA. Full form, non-performing asset. Non-performing asset. Now listen, we are doing accounting for banking companies. What transaction bank does? We go to the bank, we open our account, our money is lying with them. They will give loans to customers on which they will earn interest. They will discount the bill of customers on which they will earn discount. So these are the transactions done by bank. Now when bank does discounting or they lend money to their customers, that for bank is an asset. Okay. Now this is one of the category of asset, non-performing asset, which we commonly call it as NPA. Now, what do you exactly mean by NPA, and when a particular asset of a bank is defined as NPA? Now see, suppose you take a loan from the bank. You are supposed to pay an installment. Understand this example. You are supposed to pay an installment, say on 1st April 22. You have taken a loan from bank. Along with interest, you are supposed to make the payment, or you are supposed to make payment of a particular installment on 1st April 22. This is the due date. 1 month goes. 1st May comes. You have not paid the money. 2nd month goes. 1st June comes. You have not paid the money. 1 month over, 2 months over, 3rd month over, 1st July, you have not yet paid your money. So, when bank is supposed to recover an amount from a customer, if that amount is overdue, if that amount not due, overdue for a period of 90 days or more, then that asset is treated as a non-performing asset. Here I give you months, the criteria is 90 days. So, if I was supposed to pay anything to the bank on 1st April, from 1st April, 90 days are over and still I have not paid, or bank has not recovered from that customer the amount recoverable, then that will be treated as a non-performing asset. So non-performing asset for a bank is that asset where any amount of installment, whether inclusive of principal and or interest, is overdue for a period of 90 days or more. If you all see in the question sheet what you all have, before the objectives and after the last sum, there are 2 pages which are manually written. In that, there is a first paragraph of non-performing asset where the definition is given, the same what I explained you right now. Keep this in mind, important for objective also. When any amount is due from the customer by the bank and from the due date, 90 days are over and still it is not collected, it becomes a non-performing asset. Now, when you come to non-performing asset, there are 2 types of sums in this part. First, how to account the interest income for NPAs. First is how to account the interest income for NPAs, and second, provision. Provision is nothing but RDD. So what I am going to do today is, in this session, we will just take the first part of NPA, how to record the interest income of NPA. And in the next class we will take the provision का part. So today we will focus how bank will record the interest income in case of NPAs. As I told you, activities of bank will include giving loans to the customers or discounting the bill. On that they will earn interest and discount. So that for bank it is an income. How NPAs will record, that we are going to study. I'll be covering 5 sums. Most probably all 5 should fit in this video, because once I start the sum, every sum will take hardly 5 to 10 minutes max. Okay. Now listen, before I start, on the very first day when I started banking, I had explained you all that all banks have to follow accrual basis of accounting, that we also call it as mercantile system. All banks have to follow mercantile system or accrual basis. What do you mean by that? Mercantile system or accrual basis means you will record the expenses and income. You will record the expenses and income according to the period to which it belongs. That means, suppose there is an expense for the month of March. I pay it in April. Even though I paid it in April, the benefit I have taken in the month of March, so it will be treated as an expense for the month of March. Interest. Suppose I am supposed to get interest for the month of January. Okay. It is due for the month of Jan, but I get it in Feb. Even though I have received it in Feb, it will be treated as income of January because it was due in January. So every bank has to follow accrual basis of accounting. That is what I explained you. All expenses and income will be recorded according to the period to which it belongs, irrespective whether they are paid in the same period or received in the same period or received in advance or received later. If you are following accrual system of accounting, it has to be recorded on the basis of expenses incurred in that period and income earned in that period. Now listen, I told you what is non-performing asset, NPA. Now, a particular asset, if it is not non-performing, then it is performing. As far as this part is concerned, 2 types of assets, performing and non-performing. If a particular asset doesn't come under the category of non-performing, then it is performing. That means the amount is received on time or the period of 90 days has not passed. Now why I am focusing on this? Because if you see the theory now, after the definition of NPA, same paragraph, but see the last part. When you record income, what I told you, every banking company has to follow accrual system of accounting. Every banking company has to follow accrual system of accounting. But when it comes to bank, remember, all banks in India are governed by RBI, Reserve Bank of India. So you have to follow the guidelines or the rules and regulations set up by RBI for all the Indian banks. Now listen very carefully. The main part for which we are going to do the sums. What RBI says, banking companies are supposed to follow accrual system. So if a particular asset is performing, PM is performing asset, then you will record interest income on accrual basis. If your asset is performing, what is performing? If the asset doesn't fit under the definition of non-performing, then it will be classified as performing. So performing asset के लिए accrual basis, and when it comes to NPA, because 90 days are over, so what happens? The risk of getting money increases. So what RBI says, interest income, in case of NPAs only, you will record on cash basis. only for NPA, interest income will be recorded on the basis of cash, and for performing asset, it will be recorded on the basis of accrual. Accrual means record income and expenses according to the period to which it belongs. Clear? So keep this in mind. This is applicable for all the 5 sums what we are going to do now. I'll repeat. If the asset is performing, you will record on accrual basis, and non-performing asset you will record on cash basis. How to do that? Let's start with the sum. Take out the question sheet. Take out your question sheet. In that, first come to first page, question number 3. First page, question number 3. Very simple sum. This sum will take hardly 2 to 3 minutes to solve once I start writing the solution on the board. First 2 sums are exactly same from the question sheet. Next 3, I have made some extra question on the basis of past board papers. Same concept but a different presentation. Let's see. Following are the statement of interest and advance in respect of performing and non-performing asset of Axis Bank Limited. Find out the income to be recognized for the year ending 31st March 9. Income to be recognized means how much interest income should be credited to P&L. When I say income to be recognized means how much income interest should be credited to P&L. Now see what they have given you. They have given you the categories. Amount is in lakhs. Performing asset. CC overdraft. CC is nothing but another name for cash credit. It's an alternate name for overdraft. Overdraft and cash credit are almost same. The only difference is overdraft mein the account is running. Cash credit mein the bank will credit your account as and when required. In short, both are similar only. CC means cash credit. Term loan, bill purchase and discount, and the same 3 categories for non-performing asset. CC, overdraft, term loan, bill discounted, purchase. Now see the amount column. You have 2 columns, interest earned and interest received. Okay, so first let's give the heading. Calculation of let's write the same word what is given in the question. What they say? Find out the income to be recognized. Calculation of income to be recognized for the year 31st March. You can also call it as calculation of interest income to be credited to P&L. Amount is in lakhs, so on the right corner right there, rupees in lakhs. Rupees in lakhs. Okay guys, now listen. They have given you 2 categories, performing and non-performing. Now just be careful. As I told you, it's a very simple part. First 2 sums are identical. Next 3 sum mein there is a little bit of variation in calculation. So 4 different varieties are there. Sums are very simple, but logically understand what is the difference between those varieties. Okay. Now first what I do? First category is performing. So write it. A, performing assets. A, performing assets. Now see, which are the 3 categories? Just write the name. CC and overdraft. Term loans, that is the loan which bank gives to the customer. And the last, bill discounted and purchase. Last 4 days say we are doing that only. Now listen, what you will do. What I told you for performing. Performing में you will record the income or you will recognize your income on accrual basis. Accrual basis means what? If it is an income for that period, you will record it whether you have received or not. Accrual means what? If the income is for a particular period, you will record for that period whether you have received or no. Now see the two columns. What are the headings? Interest earned, interest received. Earned means what you have received along with what is yet to be received. You all have studied final accounts since FYJC. You know basic adjustment, outstanding expense, prepaid expense. Outstanding expense, prepaid expense come into picture only in case of accrual basis of accounting. So when I say earned means that which is received during the year plus that which is yet to receive. So in short, interest earned will also include interest received along with that other income which is due for the year but not yet received. So in short, performing asset के लिए you will take only interest earned. So see, what is your interest earned for CCN overdraft? 1800. Next, just take interest earned का figure. Next, 480. You will just take interest earned. Okay. And the next is 700. I'll repeat. For performing asset, you will take only those incomes where it is accrual basis. If they give you only received, earned is not there, it will be received only. But here they have to give you the segregation. So for performing asset, this is the income which will be credited to your P&L. Since there are three items, just take the total of the three and call it as 8. 1800, 480, 700. So 2980 is my income which will be credited to P&L but only for performing asset. Got it? So this was performing asset. You will take interest earned, you will ignore interest received because performing assets ka income is to be recognized on accrual basis. Now same way we will take the second part of this question where now we will take non-performing assets. Where we will take non-performing assets. Again, first give the headings, write the particulars, and then we will see what amount is to be given. As far as your internals are concerned, very likely sums to come from internals point of view. At the same time, when we go to the normal format of final accounts, that time also they can ask you as a part of one or two adjustment. CC overdraft, term loan, bill discounted and purchase. Now what is this? Non-performing. What I told you, when it comes to performing, accrual basis. When it comes to non-performing, what you will do? Cash basis. When I follow cash basis, that means you will record income and expense only when you pay, only when you receive. When it is cash basis, receivable, payable doesn't come into picture. So now tell me what you will do? Straightforward. What we did for PA? We considered income earned, we ignored income received. NPA, we will do the opposite. We will take only the received ka part. Earned will not come because as per RBI guidelines, you have to record only when you receive. The reason for this is because banks have a lot of NPAs, so RBI adopts a safe approach. Okay, so just take the received ka part. How much? Ignore the first part. CC and overdraft 70, term loan 40, and bill discounted and purchase 36. You know what we did in the earlier classes? End of the year discount we transferred to P&L. This is that discount. Your discount income which has been transferred to P&L. That's it. Take the total of B and get your total A plus B. 146 and 3126 A plus B. That is your total income recognized. So my total income recognized is A plus B, that is 3126. A plus B, that is 3126. Got it? So when bank prepares its P&L, in the P&L 3126 will appear under the head interest and discount income. That we will see after 2 classes when we are going to prepare full-fledged P&L and later on balance sheet assets. Got it, guys? So this was the sum. Now exactly there is a same sum, that is question number 18. I just pause the video. I'll solve that sum so I don't waste time in recording. And again I'll discuss with you, and then we will go to those 3 extra sums where the concept is a bit different.
That is one.
Okay guys, 18 sum I have already solved, nothing it is identical. I just discussed with you all, and after that we'll continue the video with 3 different sums. Same concept, but all the 3 sums are having different calculation. This question number 18 was exactly same like question number 3 only. Let's see the sum. Given below is the interest on advance of a commercial bank amount in lakhs. Same thing they gave you. Performing asset, NPA, only the question ka presentation is different. 3 assets, term loan, cash credit, overdraft, bill purchase, discounted. Columns performing में 2, interest earned received, NPA में same, interest earned received. Find out the income to be recognized for the year ended 31st March 3. Same thing. We will split this into first performing asset. As I told you, performing asset में income will be taken only on accrual basis. So same like the earlier sum, we have taken only interest earned. So for performing, we have taken the figures of interest earned, received has been ignored. All 3 ka total comes to 1020 lakhs. Okay, so performing, interest accrued, that is interest earned, received is ignored. Coming to the second part, non-performing mein, as we discussed, as per RBI guidelines, non-performing ka interest has to be recognized only on cash basis, that is when you receive. So here we have ignored interest earned and we have considered only interest received. We have taken only interest received and ignored earned. So 5, 12, 20 gives you 37. Performing 1020, non-performing ka income 37. Total income recognized in P&L will be A plus B, that is 1057. Again repeating, when this bank makes their profit and loss account, they will credit their P&L by interest and discount with 1057. After 2 classes when we prepare profit and loss account, that time you will see in detail how it goes in. Okay guys, so I'll again pause the video and I'll be back with the 3 sums what I just discussed. Okay guys, continuing further, see the sheet which has been attached below the video, the word format. There are 3 questions. We are solving all 3 of them in this video only. Concept is the same. but calculation in each of the three sums is a bit different. So please understand the concept. Let's take the first question. Calculate the interest income to be recognized for the year ending 31st March 22 from the following. They have given you again the same three assets: cash, credit, overdraft, term loan. Now see the headings. Be careful for the headings. Total interest earned. Brackets में they have given you performing and non-performing. Then interest earned on NPA. And after that, interest collected on NPA. Amounts are given for all. Okay? Now listen, a very simple presentation, but first we should understand the calculation. Again, the amount is in lakhs. Now see, they have not given us separate performing and non-performing the amount. So we cannot write the segregation what we did in the first two sums. Now see what is the first head after particulars. Total interest earned, performing, non-performing. Can I say non-performing we are going to take only on cash basis? So when it comes to earned, I will take only performing. When it comes to earned, I will take only performing. Non-performing will not come. Now, let's take the first one. Cash credit. Okay? Right there. Cash credit. Now see, 2820 is the total interest earned PA and NPA together. I don't have the segregation. So what do you do? Put a bracket here only. We will show the calculation in the brackets. 2820. What is 2820? Total interest earned, performing and non-performing. But earned, I take only performing. Now see the second column. Interest earned on NPA. Can I say this we don't take? NPA ka interest I will take only collected. Now, this 2820 includes interest earned on PA as well as NPA. But I don't want interest on NPA. I know the figure. So interest on NPA, remove it from here. That is 820. Again I am repeating. 2820 is total interest earned, performing as well as non-performing. Earned, I should take only performing. So this is total performing and non-performing. Next column, I have separate interest earned on NPA, so I will remove it. Got it? So in short, 2820 minus 820, that is not the final answer. This is the final answer of performing. I want total. So what I'll do? 2820 minus 820 is income earned on performing, because I subtracted non-performing income. Now see the last column. Interest collected on NPA. Collected means received in cash. So can I say NPA ka interest income I take only if it is in cash? It is in cash. So what you will do? To this you add that 400. So in short, it will be 2820 minus 820 plus 400. I repeat how. 2820 total interest earned PA NPA. From that deduct interest on NPA earned, and to that add interest on NPA collected. So this is my PA ka income earned. This is NPA ka interest collected. So 2000 plus 400 will give you 2400. Clear guys? Continue. Next asset is overdraft. Now the same calculation for the remaining two assets. Put a bracket. 750 is my total interest earned PA as well as NPA. 750 is my total interest earned, PA as well as NPA. PA only I need earned, NPA I don't need earned, so remove it. Minus 450, so this 750 minus 450, 300 is my PA ka income, plus NPA I will take collected only, so add 100. So 750 minus 450, 300, 300 plus 100 gives you 400. And last, same way, term loan, total interest earned, PA NPA, 2540 minus interest earned on NPA 750, and to that you will add 250. So 2540 minus 750 plus 250 gives you 2040. So my total income recognized is 4840. Okay, you can write that. Total income recognized. Again, when I prepare the profit and loss account of the bank, this amount will go to your P&L. I'll repeat, guys, this was a small calculation but a different approach. First column was total interest earned, PA NPA. I need only earned for PA, so I deducted NPA ka interest which was earned, and NPA ka interest I take only collected, so I added the collected amount. Clear? So my total interest income to be recognized or interest to be recognized that is transferred to P&L is 4840. Exactly same way, but again a different approach. We will take that extra question number 2. Same heading, calculation of interest income to be recognized. Same for the year ending 31st March 22. For the year ending 31st March 22. Okay guys, let's read this up. Calculate the interest income to be recognized for the year ending 31st March 22 from the following. Now be careful, the headings of the top question number 1 and this one are different. Total interest collected, previous sum it was earned. Total interest collected, PA NPA. Interest earned but not collected on PA. And the last one, interest earned but not collected on NPA. Interest earned but not collected on NPA. Now what you will do? Same way, we will put a bracket for calculation. In fact, your calculation will cut down a bit. Now listen. Total interest collected. Collected means received in cash. So what? When I say earned, earned means that what is received during the year in cash plus what is receivable. So this applies for both PA as well as NPA. So NPA ka to anyway I take collected, PA ka I take earned. Earned means that which is collected plus that which is yet to receive. So in short, for cash credit, entire 2000 will be considered. Will be considered first. Then see the next column. Interest earned but not collected on PA. When I say interest earned, matlab it is that income which is yet to be received. So what I told you, PMA we take full income received plus receivable. Because this is PA, can I say we will add earned? Because this is only collected on PA and NPA. PMA I need earned also. So collected plus that what is yet to be received. So 2000 plus 400, 2400. Remember, I repeat again, total income earned would mean that income which is received during the year plus that which is yet to be received for PA. But for NPA only what that is collected. Now see the last heading. Interest earned but not collected on NPA. Interest earned but not collected on NPA. That means the income is due, receivable, but you have not yet received. Now this is for what? NPA. NPA I will record only when I receive. This amount of 2000 already includes NPA ka received. So in this sum only, the last column is just given to confuse you. You have to ignore it because NPA ka income earned we don't take, and this includes NPA ka interest collected. So close the bracket here. Here it is 2400. Close the bracket here. Here it is 2400. Got it, guys? So the last column has to be ignored. Same way, let's take the remaining two assets. Overdraft 300. Total income collected, PA NPA. Collected to we have to take only. So 300 plus interest on PA. Interest on PA, whether received or no, you have to take it. So add that 100. And what I told you, interest earned but not collected on NPA will not come. The reason is NPA I take only collected, and that is already included in this 300. So close the bracket. Again 400. And the same thing you will do for term loan. Same thing you will do for term loan. Collected 2000. So 2000 plus earned but not collected on PA. Same thing, PA I need received and receivable. So I will add it, and interest earned on NPA I don't want because interest collected on NPA is already included in this 2000. So that's it. Take the total. If you see, fortunately the total of both the sums are exactly the same. In fact, even the individual items are same. So 4840, that is your total income recognized. That is your total income recognized. Clear, guys? I'll repeat. Both the sums ka concept was different. Second sum mein, this was interest on PA and NPA collected. To that, I added interest on PA which is yet to be received, because PA we take on accrual basis, received plus receivable, and NPA we take only on the basis of interest collected. So we ignored the last column because the first column includes total interest collected, NPA as well as PA. So NPA is already included in that, therefore we ignore it. Clear guys? I just change the angle of the mobile and we come to the last sum where little bit concept of NPO what you all have done in SYGC. I'll continue with extra question number 3. Let's see. From the following details given by HD Bank Limited, calculate the interest income to be credited to P&L for the year ending 31st March 2. Now see, here, like the first two sums, breakup is given, segregation is given of performing and non-performing asset. Okay. So first let's give the heading. Calculation of interest income to be credited to profit and loss account for year ending same address. Now see what they say. They have given segregation, performing, non-performing. All the three assets are same in both. Loans, bill discounted and purchase and cash credit. Now see the headings of the columns. Interest accrued on 1st April 21. Interest accrued on 1st April 21 means that which is receivable on the first day of the year. That which is receivable on the first day of the year. Interest received with the actual amount received during the year. And the last column is interest accrued on 31st March 22. Interest accrued on 31st March 22 is nothing but receivable on the last day of the year. Okay, now let's get the heading. A, performing asset. First performing asset is loan. Now, again, performing asset includes what type of income? That income which is earned. Earned means what belongs to the current year. Now listen. What is the first column after particulars? Receivable on the first day. When I say receivable on the first day, that means can I say this is last year come? And receivable on the last day, that is of the current year. You all remember SYGC ka NPO? Add outstanding of current year, less outstanding of last year. There's a logic behind that. When I say accrual basis, only that income which belongs to the current year will be considered. Now when I say something is receivable on the first day of the year, that is my last year ka outstanding. It is not an income for the current year. Okay? So now guys listen, understand this bracket. Again we'll put it in brackets only. What I will do first is, I will take income which is actually received. How much is received? Performing mein 960. This is what I have got during the year. See the last column. 480 is receivable on the last day of the year. Last day of the year matlab it includes current year ka amount which is receivable. So add outstanding of current year 480. And now what is the first column? Accrued on 1st April 21. That means receivable on the first day of the year. This is my income of last year. Performing mein I want income only of the current year. So last year is in this, so remove it. So I will remove it. So in short, see here, received plus receivable on the last day of the year minus receivable on the first day of the year. What you all used to do in NPO? Add outstanding of current year less outstanding of last year. Why we have added current year? Because it is income of the current year. Why we have deducted last year? Because it is already included in the last year ka income, so you cannot include it again. Okay guys? So 960 plus 480 minus 350. 960 plus 480 minus 350. Okay? Next. Bill discounted and purchase. Bill discounted and purchase. Same thing. We will take first the receive part. How much I have received? 1400. Actual amount received. Remember, we are on performing only. When we come to non-performing, the concept will change. Plus, on the last day of the year, I am supposed to receive 670. And what is receivable on the first day of the year, I will remove it. So I will repeat. 1400 received during the year plus what is outstanding, that means receivable for the current year, that is your closing. So 670, and from that deduct the opening. From that deduct the opening. $1,510. And the last one, cash credit. How much you have received? 3,600 plus we are on performing. What is to be received on the last day of the year? That is 850 minus what is receivable on the first day of the year, that is 785. So 3,600 plus 850 minus 785, that gives you 3,665. Okay, take the total. Remember, that is not the final answer, this is just 8. 6265. 6265. Got it? So I repeat, for performing, what you have received plus closing, that is what is receivable at the end of the year, and from that subtract what is receivable on the first day of the year. Why we add current year ka receivable? Because it is income for the current year which is yet to be received, and performing mein I need that. At the same time, why I deduct last year ka? Because this is last year ka outstanding, it is already included in last year ka income, so I cannot treat it as an income twice. Okay? Now same way, let's give the heading non-performing. Now be careful what you have to do. In fact, your job gets cut down drastically. Non-performing asset. Let's give the 3 headings. Loan, bill discounted and purchase, and cash credit. Now remember, this is NPA. What you will do? See there. Which are the 3 heads? accrued on first day, received during the year, accrued on last day. What I told you, when it comes to accounting of NPA, NPA ka income is recorded only on cash basis. That means you just have to take the interest which is collected in cash. What is received on the first day of the year, what is received on the last day of the year or receivable, we are not concerned. What has been received during the full year has to be considered. Receivable on the first day of the year, receivable on the last day or receivable anytime during the year, we are not concerned. So your job gets cut down. Accrued on 1st April 21, ignore for NPA. Accrued on 31st March 22, ignore for NPA. Just take interest what is received in 21-22. Straightforward, second column only, 600 for loan, bill discounted and purchase 700 and cash credit 900. So 9 and 7, 16, 2,200 and take the total A plus B 8465. That's your total income recognized. Got it now, guys? So I'll repeat again. Non-performing, we just took the actual amount received during the year. What was receivable on first day, what is receivable last day, we are not concerned. For performing, I need the final income, which has to be the income earned during the year. So that will include received during the year plus what is receivable on the last day of the year, because that is an income of the current year, and I will subtract what is recoverable on the first day of the year. The reason is because it is already included in the last year ka income. So received plus accrued on last day minus accrued on first day for performing, and non-performing may actual amount received only will be considered. So these were the 5 sums covered in this video. First 2 were same, so there were 4 varieties. First variety is the first 2 sums and the 3 different varieties here. Now as I mentioned in the starting, NPA mein there are 2 parts. First, interest accounting ka part, what we did right now, and in the next class we'll be taking the second part, where when I say NPA, we know 90 days are over, money is not yet recovered, so there is a risk, we have to make a provision, that is nothing but RDD. Now for NPA, depending upon the category of assets, there are category of further assets. This was performing, non-performing. There is another classification that we will study in the next class, and there are specific percentages for that. According to that, provision has to be made. That we will cover the entire thing in the next video. So that's it for today, guys. Understand the concept, revise it carefully. The sums are looking very simple, they are very simple, but what happens now, when we take each sum, it looks very simple, but when you do all together, you have to just little bit you have to be cautious in deciding which incomes to be considered and which not to be considered. And that's it. See you all in the next class with the second part of NPA, that is making provision for doubtful debts. Till then, take care, guys. Have a nice day.